November is over and we are back with the theories of stocks that I'm buying and watching this month. Hello everyone, welcome back to the channel. Today we're going to talk about the stocks that I bought in November, stocks that I'm planning to buy and stocks that I'm planning to add in December, and stocks that I added to my watch list this month. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. Last month, I talked about 3 stocks and an ETF, and those were Facebook, Lemonade, Disney, and the ETF was VOO, which is the Vanguard S&P 500 ETF. I have to say that on that video, Facebook was at about $340 per share, and it was the only stock that I didn't buy in November, as I was expecting it to go lower before adding more. But let me show you what I bought this month in my M1 Finance portfolio and my Robinhood portfolio, and at what price. Now, first, on my Robinhood portfolio, I bought on November 2nd Visa at $209 per share. I was waiting for this stock to get below 200, but it was dropping so much that I started adding a little bit before. As you guys know, that I don't like invest everything at once, and that's why I do this, because I start investing little by little in case the stock continues dropping, and it was what happened, as we are going to see later. Now, I bought Disney at $160.77 per share. Then I bought more Disney on November 16th at $160.02 per share. More Disney at $155.49 per share. And as you can see here, I bought more Visa at $201.61 per share as it continued dropping during the month. Then I bought Lemonade at $53.92 per share on November 19th, and Square at $214.45 per share on November 22nd. Lemonade again at $50.72 per share. And lastly, last but not least, more Visa at below $200, $196.23 per share. Now, for my M1 Finance portfolio, I posted this video showing you guys this portfolio, which I kind of treated as my savings account, and I've been adding more and more to it. Even though it's a small portfolio, I only add about $150 to $200 monthly to this portfolio, which I also add monthly to my Robinhood portfolio, but not the same amount, as this one is a small portfolio and I want to treat it as my savings account. Now, I only have invested $844 per share. If you want to see what I hold in this 2 buys, you have to go and watch that video. But as we can see here on the activity tab, I bought on November 16th, I bought 3 buys, which were only the 3 ETFs that I hold, which are VGT, VOO, and VTI. I bought the same thing on November 26th as well, and November 26th as well, as I've been trying to catch up. As we can see that I have 65.9% on my tech buy, but I have 34% on my funds, and I would like to see this 50-50% or at least 60-40. Now, let's talk about the stocks that I'm planning to buy this month, but let me first tell you something. I posted this video on Sunday talking about everything that was going on the market, the new variant, crude oil crashing, tax loss harvesting, and what has been happening with Chinese stocks. The main reason why all this happened was because of the new variant, and that created a lot of uncertainty and fear in the market. Then yesterday, President Biden said that he does not expect more travel restrictions as the new variant spreads. Obviously, this kind of eases things out a bit, but I believe it is definitely something that we should keep in mind, as apparently more and more cases are appearing all over the world with this new variant, and those things that the president said could change. I do believe we have more experience now with this virus. The doctors know a lot more about this virus, which I believe is why many are saying we are not going to be in lockdowns like 2020. My point with this is that I believe that the best stocks anyone could buy this month, if a crash happens because of any of these reasons that I mentioned, the best stocks are the ones that we already are investing in, if they are a good price because of that crash. I'm saying this because those are companies that we have already analyzed before, and we already know all or almost all about those companies. We have been tracking them for so long, and if we're still holding those positions, it's because we like what we are seeing with those companies, which is basically why I believe that those stocks that drop to good and attractive price, those are the ones that I would buy first before adding new positions to my portfolio. Now, the first stock I will most likely buy this month is Amazon stock, ticker symbol AMZN. Amazon is currently trading at $3,561 per share with a market cap of $1.8 trillion and a PE ratio of 69. Amazon have had a 52 weeks low of $2,880 and a 52 weeks high of $3,733 per share. I have to say that you guys know I love this company below $3,000. I have a nice average price of about $1,700 with this company, and I love it below $3,000. But I have to say that it is still at a good price right now and way more below $3,300. Something I have to say is that the stock has basically been consolidating while fundamentals have been improving all year long. We can see that after the 2020 peak, the stock was trading below those levels and almost parallel until April 2021, but it is still kind of consolidating, which caught my attention, my and many others' attention as fundamentals keep improving. We do have to understand that 2020 was a huge year for the industry and Amazon benefited a lot from that. They saw a nice acceleration in growth, and obviously that growth was not going to continue during 2021. Still, even though they grew a lot in 2020, they're still growing year over year, but obviously not at the same pace. Also, even though its PE ratio is high in comparison with others in the industry or in the stock market, we know it is because investors expect a high growth from this company. But something that caught my attention is that it has been dropping since 2016. It went up a bit in the past 5 months as the stock went up a little bit, but it is still in a downtrend. Now, we know that Amazon profit margin has never been that big, and it is currently around 5.3% as they invest a lot of money into their company to continue seeing that kind of growth. But we can see that it has been increasing as they are relying less and less on the sale of merchandise, and AWS is really driving a lot of revenue now, which is nice as the AWS has a huge profit margin. We can see that 50% of the revenue comes from their net services sales, while 2020 it was only 45%. I'm currently investing monthly in this company in my M1 Finance portfolio, and I added to my Robinhood portfolio on September. Now, they did mention that the company expects to take on several $billion of extra costs in its consumer base in the fourth quarter as a result of labor shortage, higher employee costs, global supply chain constraints, and increased freight and shipping costs. Amazon is navigating these challenges as it enters the peak holiday seasons, which obviously will affect the company in the short term while they prioritize their customers and partners in order to continue seeing and having long-term growth. The second stock in this list is Teladoc stock, ticker symbol TDOC. I have to say that I have been watching this stock very closely, as I said several months ago, as I was trying to decide if I was going to close my position or invest more. I have to say that my position is already a big position in my portfolio, and I'm planning on adding a little bit just because it has been dropping a lot and it is at a good price. I understand that many invested in it because of the pandemic, as they certainly benefited from the pandemic, and many believe that that is over. But I believe that both patients and doctors will continue with virtual care once the pandemic subsides, as it is really helpful and convenient for many people. There are many issues that simply do not require an in-person visit and are more convenient virtually. Teladoc is currently trading at $106.45 per share with a market cap of $17 billion, a 52 weeks low of $100 and a 52 weeks high of $308 per share. As we knew, the stock expanded a lot and got to very, very overvalued levels. Many are concerned about their lack of profitability, as many were expecting that with the amount of growth that they had in 2020, they would be able to increase margins, which was not like that. That made many believe that the business is not scalable. I do have to say that this is not a mature business. It is more of a baby one, as in my opinion, the virtual care market is just getting started and accelerated its growth due to the pandemic, and the industry has huge growth prospects. Global consulting firm McKinsey & Company estimates that the US virtual care market could reach $250 billion. They believe telehealth will continue to enjoy increased adoption, and in my opinion, Teladoc is the best positioned company in this industry so far. Now, Teladoc offers growth forecasts through the year 2024 at 10 to 20% primary care CAGR, which is currently 35% of the revenue. 30 to 40% mental health CAGR, currently 40% of the revenue. 25 to 35% growth in chronic, currently 25% of the revenue. And 25 to 30% growth of total revenue. I do have to say that obviously this is a risky investment and a speculative one as well, which is why I will not add a lot to my position, but will definitely add some at this current prices. I believe this can be the future, and Teladoc is very well positioned, but this is a long-term investment. Another speculative opinion that I read on Twitter and I wanted to share with you guys is that telehealth medicine will be more useful in the metaverse world, and we know how many companies and people have been talking about the metaverse lately. Talking about metaverse, the third stock in this list is obviously Facebook, or now with its new name, Meta Platforms. Facebook is currently trading at $336 per share with a market cap of $940 billion with a PE ratio of 24.19. I have to say that I have been wanting this stock to drop to 320 or even below in order to add more to my position, so I've been tracking it a lot. I invest in this stock monthly on my M1 Finance portfolio, but have been wanting to add more to my Robinhood portfolio. They have been having a nice revenue growth year over year and quarter over quarter, but the stock is down 11.52% since its latest peak. We already know that they have been rebranding their business from social media platform company to a metaverse company. They still believe advertising will be meaningful for the metaverse. Now, I was reading this article which says that of course Facebook, I mean Meta, isn't the only company to commit resources to the metaverse. Google, I mean Alphabet, has gradually announced its own ventures into the metaverse, but there's a difference. Facebook has committed its entire brand to the metaverse, and with it potentially billions of dollars of resources. For illustrative purposes, we could basically compare Facebook to Tesla. Today, we see more and more car companies following Tesla lead in producing electric vehicles. Yet, Tesla value has exploded in the recent years, and it's basically because Tesla has declared their whole brand to electric vehicles. I do believe this is the future, and I believe it has a potential, which is why I'm investing more in this company, even though I've been investing for about 2 years. Now, I have to say that I have several companies on my watch list, such as Airbnb and many more, which are, most of them are overvalued at the moment, or I have been tracking them for months just to learn more about them and the industry. Now, I have added 2 more to this watch list, which are very attractive companies for me, but are overvalued at the moment. Still, I believe both have huge potential long term, as their services are excellent and more of a necessity for many. These companies are Adobe and Intuit. Let me know in the comment section below if you would like me to do a video about these 2 companies. I would really like to know which companies are you watching and buying this month. Thank you, and see you next time.